like 20 to 30% of every dollar that gets sent back through the tax system is being eaten up by tax preparation costs,
Wow.
right? And so we have this like highly inefficient system of filing our taxes, and it doesn't have to be this way.
Welcome to The Ripple Effect, the podcast that takes you on a journey through the minds of Wharton faculty. I'm your host, Dan Loney, and in each episode, we'll be diving deep into the inspiration behind the groundbreaking research that Wharton professors have conducted and exploring how their findings resonate with the world today. Well, we are in the middle of one of everybody's favorite times of the year, tax season. But it is a time of the year which also gives us the opportunity to try and better understand some of the behaviors that occur by individuals at this time of the year. When you think about the preparation of your taxes, are you a procrastinator or not? When you're thinking about potential refunds or payments, how do you deal with one or the other? Lots to discuss, and a pleasure to be joined by Wendy de la Rosa, who's an assistant professor of marketing here at the Wharton School, who also focuses a lot about consumer financial decision making. Hi, Wendy. Great to catch up again. How are you?
I'm doing well. Excited to be here. Thanks for having
Yeah,
me.
it's great to talk to you. You know, it is kind of an interesting component of the time of the year, and I guess from a behavioral standpoint, it does give you the opportunity to gain a lot of information and data about how people handle these situations.
It does. And what we know from prior work is that people tend to think about tax refunds as windfalls. We don't incorporate it into our regular budgets. We think about this money as sort of special money, which is odd, right? Because it's our money
Right.
coming back to us, right? It's not a gift from anybody. But what that means is that we treat that money differently. And oftentimes what we find is that when people start elaborating and deeply thinking about and anticipating a tax refund, you start to allocate that tax refund multiple times over. So you start to tell yourself, hey, I'm going to use this to pay down debt. I'm going to use this to maybe put a little bit of money in emergency funds. Hey, I'm going to use this to maybe buy myself something that I've been waiting to buy, especially in this sort of time period where prices have been rising sort of rapidly over the past couple of years. And what ends up happening is that you sort of mentally spend that money 3 times over. You've allocated across so many buckets that by the time the tax refund comes in and of itself, we then don't have a real concrete plan. And so we talk to a lot of people that sort of have a little bit of regret on how they ended up spending the money. There was sort of this gap between how they planned to do it and how they actually did.
Do you see more people focused on, I'll call it a negative in terms of paying down debt, more so than thinking about buying themselves something nice? Like, that's the first thing they think about. If they know they have debt, they associate this as an opportunity to pay that down.
Yeah, so we have sort of this bias in which when we tend to think about our future selves, we tend to think about the perfect version of our future self. So in the future, you're going to work out more, you're going to save more, you're going to be a better parent, a better spouse, et cetera, right? Like we all turn into our individual versions of Beyonce in the future. And so today, when I'm thinking about what I'm going to do for my tax refund in a couple of months, I'm going to think about all of these things that I think my perfect self would do. Paying down debt or increasing my savings and putting some money away for, my child's 529 account. What happens is when the future becomes the present, I realize that I'm still the same imperfect self as I was
Right.
yesterday. And so all of the temptations that come into play sort of come right when the tax refund hits the account. And so that's sort of the tension that we have. So I'll tell you a little bit of an intervention that we did with a company called Digit a few years ago. We're understanding this tension, this gap between what I intend to do and what I actually do when the time comes, when the rubber hits the road. We sent people in this experiment one of two text messages. In one, we said, hey, you might get a tax refund. If you do, what percentage of it would you like to save? Early in the tax season in January. So people didn't know if they were going to receive a tax refund or how much. But if they did, they could save 10%, 20%, 50%. And then if Digit notice a tax refund in the account, they automatically move that money from their checking account into a savings account. In the other condition, we texted people and we said, hey, when they received their tax refund, when did it notice that there was a tax refund? We texted people and said, hey, what percentage of it would you like to save? And then you could text any percentage and then Digit would move that money. That timing difference led to almost double the amount of savings rates.
Wow.
Right. And so here's a tool that people can use of saying, let's pre-commit ourselves early in the tax season and have a very concrete plan about how you're going to save that money or how you're going to pay down debt, and then create systems. Digit is just one example where that money then automatically flows in the way that you intend to in January, not in the way that you intend to.
Right, because you have the element of procrastination. And I think sometimes procrastinators tend to be people who feel like they're going to owe money when they get their taxes done. And that dynamic then probably presents a higher level of pressure on the individual because they're concerned that they've worked hard in the last 12 months. They've done pretty much everything they can, and yet they still owe when the tax return is done.
Yeah, 85% of tax filers get a tax refund. And so, but you are talking about sort of this 15% of the population, particularly, we don't tend to think about this, but gig workers, 1099 workers, so your Lyft drivers, your Uber drivers, their taxes don't get withheld. And so a lot of them are sort of not just procrastinating, but in shock of how much they have to pay at towards the end. I think this year in particular is sort of this unique year in taxes because there's all of this discussion going around that people are going to see a larger than usual tax refund as a result of recent regulation changes around the order of $1,000. And what we're seeing in the data is that it's bigger, but it's not like I want to temper expectations. It's not that people are getting on average a tax refund that's more than $1,000 than what they used to do. The recent regulations, what they do is that they have disparate impacts. So if you're higher income, you're actually going to be a little bit more well off in terms of your tax refund than if you're lower income. And according to the latest stats by the IRS, tax refunds are about 10 to 11% higher this year than they were last year. What does that translate to? It means like an extra $300 to $400. That's not chump change, right? The average tax refund this year is about $3,600, which if you're earning minimum wage in the United States, that's the equivalent of more than 3 months of your gross income, right? So these are real dollars that have real consequences. And one of our largest poverty alleviation programs is created through the tax system.
The component of planning when people are thinking about their taxes, are people savvy enough to think about that this is not, in many cases, something that you think about after January or, when February rolls around, that there are elements of this tax preparation that are things that probably can be considered throughout the course of the year?
Oh, don't get me started about the inefficiencies of our tax prep program. I think one of the most heartbreaking stats I've come across is for our tax system is sort of the biggest tax system we have, for example, to fight poverty or to help our seniors, to help working parents. And the heartbreaking stat that I read is basically 20 to 30% of every dollar that gets sent back through the tax system is being eaten up by tax preparation costs.
Wow.
Right. And so we have this highly inefficient system of filing our taxes, and it doesn't have to be this way. In fact, there are many organizations, including Code for America, who have helped build up easy and free filing tax tools. But your second question comes why is it so hard? Why is it so hard to plan? One of the reasons why people are getting a higher than average tax refund this year, which again, people treat as a windfall, but you can conceptualize this as a loss, right? This is money that you're not earning any interest on, that it's your money. You could have gotten it earlier in the year. Is really because the inefficiencies in the system. So for example, given recent regulations, there were changes to the tax code, but there were no automatic updates to people's withholdings.
Yeah. Yeah.
Like, that's an
Yeah.
inefficient system. And so you're withholding more money, even though you know that the regulations have changed, that the system itself has changed. But there was no automatic update to withholding rates. And so that's part of the reason why people are getting a higher than average refund. And if we had a system in place from employers, for example, that really sort of put at the forefront employees' financial well-being and sort of got
Yeah.
ahead of this, I think we would help in the planning process
So
much more.
then I'll ask a version of a question that I think every expert's being asked right now. Do you think then that artificial intelligence will be able to play a role in making this better as we move forward?
Listen, AI is going to touch every aspect of our society, and it's already having a pretty sizable impact in the accounting field. What I will say is that even in the world before AI, we had tools available to us, such as the free filing tool under a different administration, where people could file their taxes for free directly with the IRS. It had an NPS score in the 90s. Like, when was the last time you saw a government tool where people said had an NPS score in the 90s? And that was before AI. And so while I think AI will be helpful in hopefully making life easier for accountants and making our lives easier as we file our taxes, a lot of the frictions, the main frictions that we're talking about, like, we don't need artificial intelligence
Right.
for. We just need sort of will from our legislative bodies, from consumers to say, it doesn't have to be this way. It doesn't have to be this hard. I don't need to get my CPA in order to file my
Right. Right.
taxes, right? And we've done it.
What do you think then are there a couple of component strategies that people should really think about? And it's probably, again, a thought process that may, pop up from time to time over the course of the year so that they can be better prepared in terms of when you get to tax time. So it doesn't become this pressure full, bomb ready to go off type of time of the year.
Yeah. And so one of the things that is fascinating is that there are very predictable patterns in tax filing rates. So you have it's sort of this inverted U. Like, right when there's a bunch of people that as soon as they get their W-2, they go and they like talk to their accountants and they go and they file their taxes because they're either liquidity constrained or they're expecting a large refund, or you know what, they just want to get it out of the way. And then there's a big lull that happens basically in the first couple of weeks of March. We're in the lull
Yeah.
right now. And then you have the bunch of people who are like, it's April
Yeah, that's right.
14th. Oh man, I better start thinking about my
Yeah.
taxes. And so if think about who you are, and I would say create your environment in a way that makes your life easier for you. So as you're thinking about setting up the appointment with your tax collector, put a reminder in your phone in January to make that appointment in March. One, your tax accountant's probably going to have more time in early March than mid-April. But then two, you start to set structures in place of saying, here is my plan. You're making it more concrete. The second thing I would say is we know that when we try to reach our goals, especially our financial goals, having a buddy, having a partner, and vocalizing it really matters, right? And so think about talking to your friend and say, when I get my tax refund, I am going to do X. Have that accountability with your buddy. But then the third, and this is where technology, and again, it doesn't have to be AI, but just like technology, it can be helpful, is create a system in place where you can pre-commit. So there are companies and fintech startups that just allow you to say, look, when there's a deposit from the IRS, automatically send whatever percentage makes sense for you to either paying down debt, to saving, to whatever you want, so that you don't have to be in the
Right.
seat when you're the most tempted to spend to make these decisions.
Wendy, always great to talk with you. Thanks very much for your time today.
Oh, always a pleasure. Take care, Dan.
Thank you. Wendy De La Rosa, Assistant Professor of Marketing here at the Wharton School. Thank you for listening to The Ripple Effect. We hope you found this episode informative and engaging. Don't forget to subscribe and leave us a review so that we can continue to bring you the best insight from the Wharton School.